The SEC has repeatedly said that they cannot approve this kind of ETF that custodies actual Bitcoin until it's structured to safeguard against fraud and manipulation. And that is exactly why so many people were pretty optimistic about this recent tranche of applications, because several of them folded in a surveillance sharing agreement.
A surveillance sharing agreement?
That was designed to address that concern. But the SEC apparently said it returned the filings because there just weren't enough details about how that arrangement would work in practice. Now, I reached out to the SEC and the agency declined to comment on the possibility of individual filings.
All right. Well, here's what I don't understand. With all of that volatility, why anybody is jumping into crypto right now? It's been a huge a year of just uncertainty around this.
Yeah, I mean, a huge year of uncertainty around this. I mean, 85% up on the year. That is just, I can't see how anybody would want to invest in Bitcoin or any crypto asset for that matter.
Yeah, it's a great point, Contessa. Like, in just the last few months, we've seen the SEC come down hard on blue chip names in the crypto sector.
What's up, traders? This is the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today, we're going to look at Bitcoin and a few other things to basically give you an idea of what we could potentially be looking for in this quarter and the next. So, if that sounds good, let's get on with it. So, since the SEC started to sue Coinbase and Binance, you can see that we did have a slight drop there, and then the BlackRock ETF came out with a whole slew of other ETFs, and then boom, we got a big move to the upside, making fresh yearly highs on the move. Now, since that occurred, we have been trading sideways just a little bit. So as you can see on Friday here, we did have a little bit of volatility based on the fact that it was the quarter close and the SEC rejection of some of those ETFs. Basically, we'll get into why. And you did see a little bit of that, of the reason why at the beginning of this video. So let's just go ahead and do what we do over here, and that's technicals. What can we expect now? Well, one thing is for sure that there is probably going to be a Bitcoin ETF. It's just a matter of when. And since, like the recession, we don't know when either one of those things are going to happen, we have to trade the chart that we have on hand. Now, as you can see, basically, Bitcoin did close bullish yesterday. However, it was just a doji. And then today, being the weekend, you can see that it is slowly trying to climb back up to that daily resistance up there. So basically what we want to see is we do want to see a daily closure above that. Now, however, with that being said, you can see here this current week is still trading inside of last week's range. And the fact that last week closed this big, it did close above this candle right here. So what you got is you got a little bit of bearish divergence playing out with this move to the upside. Now, what I've been saying is I would like to see a pullback. A pullback could essentially provide us with an opportunity to be a buyer again and not at $30,000. So if we do get a pullback based on the fact that we do have bearish divergence, then we would only expect that divergence to play out down to around the 50 on the RSI, which is this white line right here. So if it does play down to that area, could be an opportunity to be a buyer, and then maybe there'll be a support in that area to coincide with the 50 as well, to give us just a little bit more, correlation. All right, so with that being said, let's move on just a little bit. We do know that the markets are bullish. Basically, every single indicator that you can look at will show you that, the markets are in a bullish posture from year to date. Now, this is very important, as everybody knows, a new year, new trend. However, we have closed strongly on the S&P 500. If you look at this monthly candle, this is the ES futures, but it still looks the same on the S&P 500. You made fresh 52-week highs twice in the month of June alone. That in itself is extremely bullish. Now, for the last 2 quarters, this thing has made higher highs and higher lows, moving almost up to all-time high regions. Now, if I just pull a little line from here down to where we currently are, you can see that we got as high as off the all-time highs from 6%. 6% until we make fresh all-time highs. Let's see it to the upside. because it will be a little bit different. So you need a 6.89% move from where current price is to make a fresh all-time high. And I don't think anybody could call it a bear market once the S&P 500 has made all-time highs. Pulling up on the weekly time frame all of your major moving averages, you can see that the structure is bullish. On the live stream that I did on Thursday, I went through a whole big shebang. If you haven't checked it out, go check it out. Basically showing you that, every single time that this has happened with the moving averages, you have never made another low until a new recession appears, or until, something else bad happens to cause a recession. So essentially, just according to the past, now let me be clear here, this does not mean that we will see new all-time highs, that we are starting a new secular trend to the upside, but there's a lot of evidence supporting the fact that we are. All right, so with that being said, if risk assets are bullish and we continue to see a drop on the dollar as we got on Friday, if you look here on the weekly time frame, the moving averages are still structured in a bullish manner with the dollar on the weekly time frame. On the daily time frame, however, you are bearish. You did get a nice little pop above this 50 on the RSI, which would have been near-term bullish. However, on Friday, we tagged that yearly opening range and had a bearish engulfing candle to the downside. Fabulous stuff. So what I wanted to see is it close under this quarterly support, because as you can see right now, you are starting with a new quarter when this market opens on Sunday night. And although this quarter didn't trade completely inside of last quarter's candle because it took out last quarter's low, it is still what would be looked at on a price action basis as just simply a pullback from the range, all right, from last quarter's range. Now, the fact that we did make new lows on this quarter could suggest, it's not a guarantee, but it could suggest that we may see new lows on the dollar, if not next quarter, maybe Q4. And that would be very good for bullish prices on Bitcoin. Now, we did take a long on the Euro USD yesterday. Let me go ahead and pull this up, and I will show you basically what's going on. We tested last quarter's open right there, and then traded up and made a lower high and came in and made a lower low. Now, since this did close the way it does, it could still be a downtrend here for the near term. But let's be clear, on the higher time frames, or the yearly, if you will, you are making higher highs and higher lows, okay? And that constitutes a bullish trend. Also pulling into the 50, getting a nice bounce there. So literally all we're doing is we're waiting for this thing to break out, as the S&P 500 already did break out of its downtrend right there. And you can see once it did, you had 4 days of straight upside, with this wick right here taking out a fresh 52-week high. That is a yearly high. That is bullish. Okay, so moving over here to the sectors, because this does help also with what I'm trying to explain to you. Basically, the S&P 500 has moved up essentially from like 8 stocks, right? The strongest 8 tech stocks have literally pushed the S&P 500 up. And what we need is a broad-based market move. We need the low caps and the mid caps and the top cap stocks all moving up in tandem to give us a strong secular trend. If we move over here and we look at all these sectors here, year to date would be marked by the yellow line. You can see obviously the XLK, the technology sector, is up. Your communication sector is up. Energy sector is down. We know that oil is not having a very good year. Neither is natural gas. So the energy sector is low. Pulling up the consumer discretionary, it is mooning, baby. Financials, as we know, not doing so good this year. However, they are moving from the lows that were put in during the quote unquote bank crisis which, I made this case before. If you got 3 banks out of 4,500 that collapse, I don't really think you can call that a crisis. That's just my opinion. Here we go. Material sector up on the year. XLI, which is industrial, up on the year. XLP, consumer staples, down on the year, but moving towards the yearly opening range, which would make it year-to-date positive if it crosses that yellow line. XLV, which is healthcare, not doing so good this year, did retest the yearly opening range, did have a pullback, however, it was a lower high. So what I would love to see is us get up here and make a fresh yearly high. If that happens, that is going to help the overall stock market, the S&P 500, push to new highs. So far, out of all of these sectors that I've shown you, only a couple of them are below the yellow line, and they're not far below. Home builders, skyrocketing. Real estate, just now breaking back out above the yearly opening range. And then utilities not doing so good. So I ask you, dear viewer, is the broader market, is the broader S&P 500 not helping the market move to the upside? So in finalizing of this video, shall I say, let's just trade the chart as the days go. Obviously, we are day traders mostly, but we do look for secular trends as well. We did buy the yearly opening range on Bitcoin. We are doing very, very well on Bitcoin. And for the near term, we might see a little bit of volatility that moves to the downside, but eventually a spot ETF, in my opinion, will be approved. And once that happens, Bitcoin could just straight shoot to the moon. So if you did like this video, please show me that by giving me a big fat thumbs up. Thank you so much for your time. If you stuck around to the end of this video, thank you so much. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.